What's up, everyone? All right, so I'm going to go over my trades for today. We had some momentum this morning, so we'll start by going over the gap scanner. I was up on the early side this morning, and naturally, one of the things I do is I check the gap scans on my phone. So I could pull up the scans right on my phone, and then I could see whether or not it's worth kind of, hustling over here to my little office, or if I can take my time a little bit. I saw GSMG as one of the leading gappers early this morning, but noted immediately that it was an 82-cent stock. So therefore, I wasn't very interested. Drma, this one, it was on the scans yesterday as well. And I saw some traders who took trades on it earlier yesterday morning at around $1.50, $1.60. So continuing today, which is good. But one of the things you can note about this one is that the float is very low. You can see that the float here is only less than 600,000 shares. So a very low float has the potential to make a big move, has 55 million shares of volume, and it was fairly thickly traded. It didn't act like a low float stock, really. Yeah, it's up 90% right now, but it was trading much more thickly than your typical low float stock. So I thought that was kind of interesting. You can see I did get a couple trades on it, but it wasn't that easy. BLU, this one, higher float. I believe it's a buyout anyways. SLGG, price is too low. PTPI, I traded that one. We'll talk about that one. GMDA, float's too high. ALR, a little too cheap. So, there were a couple different stocks that popped up, and so when I first sat down this morning, I actually went red on my first trade of the day. So first trade of the day was on YS. All right, so YS hits the scanners fairly early, as you can see here, around 7:10, 7:15, 7:20. And my first trade on it was a long. I bought the dip at 190, which I thought was a decent little dip. I'll show you the chart. So it tapped. Let's see, it tapped 2 right here. It dips down, and you might be kind of shocked at how I could have even lost money on this trade. I'm a little shocked as well as I look at it right now, but I managed to do it. So how did that happen? Well, I got in at 719 at 190 right here. So I got in at 190, and we might even need to look at the 10-second chart on this one just to help you better understand how I managed to lose. I kept a tight leash on it. So, for what it's worth, I'm down $200, which is not a big deal. But this is where I got in. So I got in right here at 190, and then I added at 195 right here, and you see how it came up to 2, and it couldn't break that level, and it dropped back down, and I sold right here. I was like, no, I don't like it. So I took my loss, $200. It comes back up, a minute or so later, and it broke through 2. So, the thing for me, though, is that I bought this dip, I added for the breakout, and then it stalled out right there. And I thought, nope, that's enough of a reason to get out. The sign, the exit signal was there, the weakness was there, and I sold. And I took a $200 loss, and that's not a big deal. That was a good exit. It was the right exit. I didn't sell at the bottom. I got out, just a little below my entry, and I had bought 5,000 shares. So on a 5,000 share position, to lose $200 is really not too bad. Anyways, so stopped out on that. It does end up going up a little bit. My next trade was Drma. So Drma was also a losing trade. So my first 2 trades put me in the red. On this one, this was, I tried to do a dip trade on it. So it pops up here over VWAP. It sells off a little bit, and I bought this dip right here. I thought this would hold VWAP and then curl back up, but it went lower instead, and so I took a loss on that one. That was also a 5,000 share position, and I think the loss on that was like $300. So relatively small loss there, but that put me in the day with 2 red trades. So I'd broken the ice and I was going in the red. Now Drma ended up coming back up, which was good. I also took a trade on AMST. That was my next trade. My third trade was AMST pre-market. Jumped in. I pressed the buy button at 510. I filled at 523. So that's a little bit of slippage. It wasn't a big order, but 2,000 shares, and I got $200 of slippage on that order. Not great. It ends up hitting a high here of 534, and I stopped out at 5 as it came back down. So I lost like 400 or 500 on that trade. It's a little bit of a bigger loss, and that put me down a little over 1,000 on the day with 3 red trades. So sometimes I'll say if I have 3 red trades, I'm going to lock it up and walk away. Because I was not below my max loss, and one of the losses, well, 2 of them they were all quite small. I thought, well, let's take it slow and see how things go. Now, some people will say, Ross, that's you breaking your rules. And I would say that if I had a hard set rule that if I ever have 3 red trades in a row, I'm going to walk away and I'm going to stick to that rule. I'm going to always follow it. And that's that. Then yes, that's a rule that I'd be breaking. That's not really the case for me. It's more of a rule of thumb. If I have 3 red trades in a row, I try to be really aware of the fact that clearly my accuracy is poor and maybe this is a day that I should just walk away. But if it's early and those 3 losses have all been very small, then that's good risk management. And the 4th trade could be a great trade, and it actually ended up being the case. And it more than made up for the first 3 small losses because I was managing my risk well. Now, this is where I'm at in my career. For someone who's a beginner trader, when I give you guardrails for your trading or rules that I would encourage you to follow, that's based on the fact that as a beginner trader, sometimes after 3 red trades in a row, you're going to get really emotionally activated. You're going to get frustrated, and that's when things can start to spiral. So for another trader, it may make a lot more sense to go ahead and follow, these tighter guardrails of, 2 or 3 consecutive losers, wrap it up, or down more than 1,000 on the day, call it done, don't make it worse. When you get to be sort of the place that I'm at with more experience, you start to give yourself a little bit of space on some of those rules. Now, but even for me, for max loss, if I'm down more than $5,000, I really don't want to keep trading. Not in this market right now. In a hot market, I could lose $5,000 on one trade and then make 15 on the next, and it's 5,000 is too tight of a max loss on the day. But that's not the market that we're in right now. So anyways, so lost on AMST, and then my next trade was on DRMA. So on DRMA, it ended up curling back up, and we'll back up this chart. So I got back in this as it started to pull away right here. I got in at 294 and 295 for the break of $3. So that was right in this area here. So that ended up being a really nice trade right there, that entry at 3. It was a breakout trade. It wasn't a dip trade. My first 2 trades were dips, and then the AMST trade was a breakout trade. All 3 were losers. This was a breakout trade, and it ended up being a nice winner. We got the move up to the high there, which was 315, and then a micro pullback, and then a pop up to 325. And I traded this fairly aggressively. I bought 3,500 shares on my first order at 94. I added another 3,500, and then I added another 3,500. So I scaled up in slightly bigger blocks than my normal 3,000. This was a little bit of a lower price stock. Now, I guess I was doing 5,000 on some of my trades earlier as full size, but on this one, I got myself up over 10,000 shares. So that was good. That put me green on the day. In fact, that recouped the 1,000 that I had lost, and that put me green on the day by about $400 or $500, which was good. Maybe even 700, maybe 700 after I hit the high of 320. Then it pulls back a little bit. I did take this false breakout right here, and I lost on it, and that put me, now I can't remember where it put me on my P&L, but I did take a loss on that. Might have even put me back to red on the day. Then I got back in right here, 320, false breakout, but I didn't lose on it. I stopped out flat. Came back up again. I got back in this time again at 320, added at 325. I started with 5,000, went to 10, went to 15, and went to 20,000 shares. That paid off. We got a nice breakout up to 340. I had traded each of these with bigger size, 10,000, 15,000 shares, 5,000 starter. Once I'd gotten myself into the green on the day, I started sizing up a little. But the fact is, DRMA was kind of choppy, and it really was a struggle. It felt like a real fight to get much of anything. I got this trade here as well with 20,000 shares, but unfortunately, I was in at 47, a little high. It popped up to 60, it dips back down, it pops up. I ended up selling it like 52, 51. So it wasn't a very big winner. You had those candle wicks, but I didn't get anything out up there. Then it sells off and is back below these moving averages, starts to dip down. So at that point, I switched to PTPI. So PTPI pops up, starts squeezing, and initially we saw it early. It popped up kind of twice. Let's see. We had this first move here at like 850. So let me find my first trade on it. My first trade on it was at about 853, and that was when it was at $5.67. So that was right in this area here. 853. Okay, yep. So right. So this one was this was not a very good trade. So it hit a high up here of 70. Let's see, 73. It dips down. I bought the dip at 66. It comes back up to a high of 75. It was like a $200 winner. It was small. It was really nothing to be excited about. But then at the open, I got some more trades on it. So going into the open, I actually jumped in right here as it started to squeeze back up at about the same price of 567. I was looking for a retest of the pre-market highs, and if it broke that level, I was looking for a move to 6, and we got it. It squeezed up to a high of 611, which marked the high of day, and that put me up over 4,000 on the day. So that was a nice trade. I then saw this flush, and I bought 1,000 shares at 522 into the false halt. Well, into the halt. I thought it was going to be a false halt, and then it halted for real. It opened. I added another 1,000 shares, and it popped up to 534, and then it dipped back down, and then it came back up. So I got out more or less break even. I think it might have been a small winner, but it didn't end up giving me the bounce that I thought it would. So that was PTPI, and that was my last trade of the day. I watched some momentum on a couple of their names, PHIO. This one squeezed up, halted 3 times in a row, opens lower, flushes, halts down, bounces up, back down, curls back up here, but choppy. I mean, this is sort of difficult stuff to trade. HTGM, I bought 1,000 shares of it, made $135, but it halted twice in a row going up as well. I bought the dip down here as it curled back up at about 425, sold at 445, 450, something like that. Anyways, we got a nice little curl back up, but again, nothing nearly as strong as what we had yesterday on WINT. Although on WINT yesterday, I didn't end up trading it because I didn't feel like I could manage my risk, which is fine. I mean, that's just sometimes the way it goes. So no FOMO yesterday. I was hoping that we might see some nice big moves today, right? I mean, we saw some yesterday, even though this wasn't easy for me to trade. At least we saw something. But today was a little colder. So I don't know. I think traders may be just sitting tight a little bit. Some of the stocks from yesterday ended up rolling over, forming these topping tail dojis and not being as clean as maybe we would have liked. So that might have been weighing on things a little bit. But in any case, I had a good day yesterday, had a good day today. I have now exceeded my weekly goal, and it's only Tuesday morning, which is great. But I didn't do as well last week. I was green, but I came up a little bit short on my weekly goal last week because I had a red day on Monday and a red day again on, I think it was Thursday. So I have a little bit of ground to make up to get myself sort of back on track with my monthly goal. I hit my monthly goal the first week. I came up short the second week, and so far I've hit it on the third week here. But now I've got, of course, 3 days left, and I want to make sure I don't have a big red day if I can help it. And what I would like is to chip away with some more small green days so I can catch up on maybe what I was a little bit behind on last week. that would put me back on track at the end of this week for my monthly goal. And then we'll go into next week, last week of the month of April, which is crazy. And hopefully I can have a nice finish. But, as I've said, this year has been, kind of interesting. January and February were really strong for me. I hit my monthly goal, I think both months, definitely in January. I think maybe I was just a little shy in February, but only by a couple $1,000s. And then March, the banking crisis just really made it very difficult to find some good opportunities for me, for my strategy. So March didn't make any progress. And now in April, I'm kind of having to, not only, of course, hit my April goal, but I also feel like I'm a little bit behind the ball. So I've got to keep my head down, stay disciplined, stay focused, and, just trying not to compare myself to other people. I see other people out there, some, who have certainly made more in this last week than I did on some of these moves, who felt they could take more risk than I felt that I could take. And I want to be happy for them, but not compare myself to them to the point where I feel like, man, I'm really an idiot for only making, X amount yesterday when this other person made, twice that or whatever it is. We can all do that. And the second you start doing that, you're no longer grateful and appreciative for the gains that you've made. And when you don't appreciate them, it's easy to give them back, being reckless, careless, and giving into FOMO, chasing stuff. So, and then next thing you know, you're red on the day, and then you're even more frustrated. So I'm just trying to keep my head down, chip away, pace myself, make up a little bit of ground. And I'm really glad that these last 3 weeks have been as good as they've been, because we were definitely due for some nice momentum. Yeah, I wish I maybe could have traded a little more aggressively, but I had to do what was right for me from the perspective first of managing downside risk. You start swinging with 30, 40, 50,000 shares like I have in the past, and that's all great until you catch a 30-cent loss and you're down 15 grand, in one day, which right now my biggest loss of the year is, let's see. Biggest loss of the year right now is 8,400. And that's in terms of red day, biggest red day. So that's not too bad. I can live with that. If I looked back at 2022, the first, 3 months of 2022, my biggest red day last year, as of this time, was minus 39,000. Wow. Now I was up more than I am. I was up more than twice what I am today. So, I was swinging bigger. I was having bigger wins. I had last year, my biggest green day was a $68,000 green day as of, this first 3 months. So, last year was, but again, that's even comparing myself to myself. And it's not really worth doing that. I would certainly be locking up $68,000 green days if I felt the market could really support me trading that aggressively, but I don't right now. So keeping it tight, keeping my head down, and just trying to chip away. So anyways, that's it for Tuesday. I'll be back at it first thing tomorrow. And a reminder for those tuning in, as always, that trading is risky and my results aren't typical. So make sure you take it slow and practice this simulator before you put real money on the line. Today, I taught a class on the 3 beginner strategies, the 3 phases for most beginner traders. So check that out. I'll put a link to that right here at the end of this episode. And I'll see you guys back at it first thing tomorrow morning.